explaining how to trade using AM to the power of 3, which will be accumulation, manipulation, and distribution. So for clarification, my accumulation or range, as I like to call it as well, will be my blue boxes. The manipulation will be the red boxes. The reversal or price will tend to reverse will be in the yellow boxes, and my distribution will be in these green boxes. So to get started, what this is. So accumulation is where price will start to create a range. For example, as we can see here, let me just erase this. Here we can see price started to form a range right here where it was stuck. And keep in mind, this is in the 15-minute time frame and a 30-minute time frame. Since price is fractal, you can observe this in all sorts of time frames. Here we see this range being created as well as this range. So, but first we need to scale down to a lower time frame to be able to see everything because price is fractal. Sorry for this. There we go. So here we see that our price starts accumulating, creating a range in between the top of this bullish wick and this bearish candlestick right here. This right here, these two candlesticks, the bearish one and the bullish one, these are very strong entries and exits out of the range. This will be our manipulation. This is where price is leaving the range to manipulate, to create, I don't know, fill any more orders, you know, whatever price wants to do for its reasons, right? But this is where price is manipulating, right? This is where it's faking out everything. This area right here. So this is our focus right now. Here we see that price is sticking out. So what we do, we will use our fib retracement for our standard deviation, and we will fill it out from the bottom of this candlestick wick all the way to back into the range. So our manipulation. And here are the settings if anybody's interested. By the way, I did not create this concept or strategy. I'm quite unsure of who or from where it originated, but I personally learned this from T-Trades, and he can explain this way better than I can. This is just a bit of what he taught that I learned from him. But here are the settings. Back on track. So here we can see the standard deviation. Boom, from the manipulation all the way back into the range, and we see that price and throughout the standard deviation, which will be our fib retracement, price is likely to reverse in two areas. In between here, it's very likely to reverse for the reversal to occur, and as well as this area up here. But price realistically can do it from throughout the whole thing. But the -2 to 2.5 will be the strongest. And also, when you're looking throughout the standard deviation, you're not just looking for your areas of taking profit or liquidity to be taken out. It's not just going to be in the -2 or the -2.5 exact marks. You need to search within those areas any other PD rays that are likely to match along with your confluences to be able to see where to take profit from. For example, in this one and this one, we had a similar occurrence of it. You know, we have a range created. I showed you guys in a 30-minute time frame. There was a range being created right here. Markets where the price was just dead. Indecision in markets, it wasn't sure. We created a range right here. This is our manipulation. This whole area where price exited will be our manipulation. And we use the same thing. Use our standard deviation right here to mark it out from the bottom all the way back into the range. Price had a forceful, very strong exit, and this is where price would be likely to present to reverse into this area. But we see that price kept on pushing up. What other PD rays we have lined up along here? We have some resting sell side liquidity right here, and it gets swept right here. Try to retest it, and it actually went all the way up into the -4 of the standard deviation mark if you would have held. But you're always just looking for any other PD rays that align with your confluences within this area. And right here, whenever price does leave, along with these ones, it would always, whenever, for example, and this is a prime example right here, we had another range being created right here. But before price, sorry about this. Before price really took off, we see that price was leaving, but then it took back in. So whenever price leaves very strongly, but it just barely taps back into the range, that is signaling that price is just coming back into filling more orders before it keeps on turning up to the upside or the downside. I've seen this multiple times throughout the markets. This is something that I personally witnessed and I vouch for, which may not mean it, but whenever price does leave within a range, it will a lot of times whenever it just comes back in and there's some indecision or just it's a quick draw and leaves a wick, it is very likely and most of the time just filling in orders before it keeps going up or keeps going down to the direction it was leaving in. For example, we see this here. It has a quick leave, comes back into the range, and we see filling out more orders right here, and boom, it took off. That is just one example of trading using that, the AMD strategy. Here I have another example for you guys. In Euro, this one seems a little bit more complicated. But it's the same concept. It will be the same concept. And again, guys, this by itself, just seeing ranges, accumulation, distribution, it is not a viable concept or strategy that I would recommend for anybody to use. And also, by the way, this is all, I am not certified to give any sort of advice on trading or what to do with your money. I'm not telling you guys anything to do. I am just simply giving you guys my personal outlook and what I have observed in the market throughout countless hours and months studying it and observing it. But I am not licensed or in any way giving you guys advice on what to do. But here we see something occurring. If I can just scale out to our time frame. Here we had a price range accumulation occurring right here. Let me scale out for you guys. It won't always be perfect, picture perfect. The ranges, you really have to have intuition and combine it with other PD arrays and other confluences to really see what's happening. But in this instance, we see throughout part of the London sessions, we see that price right here, and throughout the Asians and London sessions, my apologies. Right here, we had near to liquidity, we had swept. So here we had a range being created. Price really stuck here for a couple hours. And then we had a big exit. This candlestick right here is our big exit right here. And then we had a strong entry back in. So this is signifying this there's our manipulation, a strong entry, strong exit, and we created an order block of sort right here. We can see, and we see that it got respected over here. We had an order block, a super liquidity, this whole thing. You guys get the point. We had an order block completed as a manipulation. And then we see price comes back in and extension. We draw our standard deviation from the bottom of throughout the whole manipulation, and this is what we got. Price. We obviously, once again, guys, you match up other PD rates to find out where price is likely to reverse or fill out orders. This would have been our zone of reversal. It seems the price actually contemplated it for a while. It decided no, and it will keep on scaling up. And here we have another range being created. From right here, we see price is stuck right here throughout this whole zone. So what happens? Then price, remember guys, price is fractal. Price is going to happen on all time frames and on the smaller amounts. It's here. We could see it occurring over here once again. Let me erase this. We see another, we already created a range right here, right? This is our manipulation. This whole thing is our manipulation as well. for this range, for this whole range, right? This is our manipulation, and we see it panned out very perfectly, very beautifully, sorry. So not only did this one hit the standard deviation all the way perfectly, almost on the dot, except for this little extension right here, we see it with this other big accumulation that occurred right here. This would be our, this whole red area would be our manipulation, and we see that it extended all the way very beautifully down into this 15 minutes fair value gap, which I had marked out, and extended all the way. That's a nice take profit or a nice trade. Very beautiful. And we see, guys, how I told you, whenever price leaves an area, it would always come back in to fill in more orders before it takes off all the way. For example, right here, we see price dropped all the way here. This will not be an optimal time to join. If you're missing out, do not FOMO, guys. I repeat, do not FOMO. If you missed out your entry, you miss it out. There will always be more trades for you to take in the markets. You do not need to take these risky, just bad trades that are not necessary. The markets aren't going anywhere. You will always be able to trade these. But right here, we see that price entered this candlestick right here. We see that price entered right here. This would have been your entry. If you missed out, your entry would have been, mark it out. Your entry would have been right here when price entered back in. Take profits right here. That would have been your entry right there if you hadn't missed out. Back on track, we see that price, we had a market structure shift all along over here, and price panned out beautifully. Now back to this one, which I had previously been showing. We see price created another range, a smaller range right here. This is your manipulation for the smaller range, and I know it's ridiculous. Obviously, this isn't a trade I would recommend for anybody to take. Well, maybe you're scalping, using very big sizes, a lot of contracts. But here we can see that price created range. This is your manipulation, a strong forceful entry, strong entry back here, and draw the cross. This is the reversal zone. Boom, price enters back in again, drops down, and obviously this is just an example, guys. This happens throughout all. And right here, we had another smaller one. I'm not going to demonstrate it. It's essentially the same thing over here, but on a 5-minute time frame. And it just kind of goes to show how prices, the strategy and how price is fractal. It works on all time frames. Literally every single time frame this will work on. Here we have it again. A range being created, your manipulation. This will be your distribution. I don't know if I didn't take this trade, but this isn't probably a good example of it. But that kind of draws to the end of it. And once again, guys, this is not a strategy just to use by itself. It's important to add other confluences and other PD arrays within it to be able to have a good setup for it. But that is essentially the power of 3 and how you can use it using the strategy of accumulation, manipulation, and your distribution. Oh, I'm not sure if I explained distribution. The distribution is just the rest of it. So, for example, this was our manipulation. This is your accumulation. The distribution is simply everything that pounds it afterwards. So this whole thing would have been your distribution. This whole thing after the whole thing that occurred. That is your distribution. And your reversal will be anywhere from the -2 to -2.5 zone. And that pretty much concludes it. That's the power 3 and how you could trade with it.